Good afternoon, folks. Andy Petraza here with Special Effects Academy, and we are ready to get started with our weekly review. And again, there's nothing out of the ordinary or extraordinary. This is a weekly session. Every start of the week, we will go through the all the fundamentals for the upcoming week, as well as take a look at the currency pairs and see which are the likely movers for the week. So that being said, let me share my screen here. Let's take a look at what's coming up for the week ahead. You should be seeing our website with the fundamental announcement calendar, which should be coming up momentarily. And we'll see what we've got in the works right now. See who we have on the line. Oh, hi, Jeffrey. Hi, Callum.
Morning.
Hello, good evening.
How's everything going, guys? Okay, so we have our calendar. Hopefully you're seeing my screen. Starts with today with the, I'm just going to remove the lows. They tend to be unimportant.
Oh yeah, Andy, the market is open tomorrow. Even the President's Day, it doesn't close, huh?
Yeah, the market is open, mainly because the rest of the countries, for whatever reason, don't follow our holidays and they don't celebrate President's Day, the buggers. The stock market is closed, but the Forex market doesn't close for President's Day. The Forex market doesn't exist as a place. There's no building you can walk up to and say, this is the Forex market in New York. Forex market is just individual brokers and big institutions trading Forex back and forth.
Okay.
So as long as one of them is doing it, the market is technically open. What you will see tomorrow during the hours when New York alone would be open, which is noon to 6 p.m. or noon to 5 p.m. rather, you're going to see very low volume because at that point London's going to be closed and most of the U.S. is celebrating the holiday instead of trading. So volume will be much lower, but it'll still be open. On days like Christmas or New Year's, that's when the entire market is absolutely closed. There's no trading at all.
Okay.
But other than that, I think that's it really. Christmas, New Year's, yeah, I don't recall any other global holiday where the market would be entirely closed. You will see bank holidays in England, for example, so trading will be very light during their hours, stuff like that, but not a complete closure. Okay, back to us here with the calendar, and you can get this on our website, the link you're seeing there, Special Effects Academy Fundamental Announcements will take you here. You can customize it to whatever impact you want, the currency pairs. So what we're looking at here is that for tonight, we have 4 Japanese announcements, basically under exports and imports year over year, and trade balance, which is another way of saying the same thing. So this is just going to tell us if they owe money or if they get money at the end of the period, based on whether they imported more than they exported or vice versa. These tend to not move the yen all that much unless there's a big surprise, but it's good to keep them on the radar. This is the previous value for the announcement. It doesn't look like there's a forecast, and of course the actual isn't out yet till about 40 minutes from now. So we'll probably be on this call when this comes out. This one is important, and that is tomorrow at 7:30 p.m. U.S. Eastern Time, is the Bank of Australia, the Royal Bank of Australia, is releasing their minutes of their last meeting. This is the equivalent of the federal bank in the United States releasing their minutes. So it could have a major impact on the Aussie pairs. So this would be the first one that I really want to keep on my radar. Is tomorrow, 7:30 p.m. Moving into Tuesday, we see a lot of mediums and nothing that really sparks my interest. For the pound at 5 a.m. Eastern time on Tuesday, we have inflation report hearings, and that is labeled high impact. No real expectation on my end. It could go either way, but this is another one that I want to keep on my radar. So I would be highlighting the Aussie and pound pairs based on the strategy we're following in this trading room, really not to be in any open trades at that time, unless we'd already been in the trades and they're at profit, then I would tighten my stops, but I wouldn't be necessarily opening any trades on Aussie or pound pairs until after their respective announcements. We continue with some Euro announcements on Tuesday early morning, 5 a.m., also medium, and yet another Japanese announcement at 11:30 p.m., the All Industry Activity Index month over month. All of those mediums, so I'm really not going to worry. Then you have at 3 a.m., so the market open for the London market on Wednesday, 3 a.m., you have the non-monetary policy European Community Bank meeting. Again, this is much like the Royal Bank of Australia. This is the equivalent to the Fed meetings for the European market. So this is a high impact announcement, whatever it ends up being. These, what they're going to release is a policy, so it's not going to be a number, but it will give an indication to the market whether to be bullish or bearish, or as they say in those circles, hawkish, which means aggressive, or dovish, which means passive. So hawkish equals bullish and dovish equals bearish. You will hear those terms used in some of these meetings. We continue with some more European and British announcements, medium, and nothing there that stands out. Then you have the manufacturing indexes coming out of the U.S. on Wednesday at 9:45 a.m., also medium. And then at 2 p.m., you have a big one. So for all dollar pairs, 2 p.m. on Wednesday is the Fed releasing their minutes. So it looks like every single federal bank around the world, or country bank around the world, is releasing minutes this week. So Wednesday, 2 p.m. is for the U.S. So this is going to be a very tricky week because we're already cautious on Aussie, pound, and now dollar for Wednesday. So we need to be aware of the hours this happens and adjust our trades and our trading accordingly. On Thursday, we have the gross domestic product, the GDP year over year and quarter over quarter from England, and those are medium. We have yet another monetary policy meeting announcement coming out of the European market at 7:30 a.m. on Thursday. That is the high. And we have the retail sales month over month out of Canada at 8:30 a.m. on Thursday, also a high. Some U.S. and another Euro announcement on Thursday, medium, and nothing there that stands out either. And finally, on Friday, we have the Consumer Price Index, the CPI, from the Europeans, and they are high at 5 a.m. What? So that is another blip against the euro. Guys, anybody not talking, which means anybody not me, please mute your phone. Thank you. And let me do you all a favor and mute you myself. Okay, so that quieted that. So back to what I was saying. For Friday, we have another European high impact announcement coming out on their CPI, and we have a bunch of Canadian mediums, and last but not least, we have the U.S. oil rig count coming out at 1 p.m. on Friday. All of those are mediums, so really we want to be careful with the highs, which means the Aussie, British, Euro, and dollar for this week. Oh, and Canadian for their retail sales. So most of the, actually all of the big currencies have high announcements this week. So we need to dance around those. So just keep a close eye on them. We will be trading if any good opportunity comes up on any of these pairs, because it's a hodgepodge week. They're coming in pretty much every single day. But we will be extra careful to be looking at the market and at our trades right before any of these announcements, and make sure we're protected either by a tight stop loss, or we simply get out of the trade before the announcement comes out. That will be determined at the proper time, not right now. Okay. So that's it, and Callum, I hope you captured this on your cheat sheet for me so we can review that later on, but if not, I still have this screen open. I'm just going to change this.
I've been doing it as we're going along. I haven't put the times in because I'm trying to unconfuse myself.
That's okay. So if I've left only the high showing on the screen, so if you want to take a screenshot of that, those are the highs for the week and the proper times. And you see we have high announcements every single day except today. Today being Sunday for me and Monday for you. So this one on Monday, Callum, is really your Tuesday, 7:30 a.m. So nothing going on for the next 24, 25 hours. We've got a grace before the first one comes out. Okay. So I'm going to stop that share at this point and start sharing my my trading console, my MetaTrader, so we can take a look at the charts. And I see Clark has joined. Clark, welcome aboard. We just went through the fundamentals. I don't know how much you caught of that, but we will take another look at them at the end before we sign off. Okay, so we are on our MetaTrader screen, and I'm going to be looking at the dailies first of all. So bear with me. I want to look at my dailies for any significant action. Okay, we're going to start with the Euro USD on the daily, which is what's on our screen right now. Here you can see the trend lines I've been carrying on this pair for quite a while. Anybody who's seen my post online or has spoken with me knows I am extremely bullish on the Euro USD, and that is simply because it has been steadily going up since December of 2016. So once it established this trend line and then started establishing ever steeper trend lines, this is a pair that I have not sold other than for very short in and out scalps. My long-term trades have all been long on this pair. It is now arriving very close to a major trend line. This trend line is from the monthly chart. And I'm going to shrink this a little bit so we can see where it's coming from. And you guys can see exactly how far back this goes. I need to click on this one so I can move my chart. Okay, so as you can see, that trend line comes back from the remote past. So that trend line was established way back in 2010, 2011. It is from the monthly, and it has major implications. Actually, the first point, the high, is from 2008, and the trend line was itself established when we hit this high in 2011. And again, this is on a monthly, so that's why the time scale is so huge. But on that trend line, we are still in a short scenario for the euro, but that is looking at years worth of action. And if it breaks that trend line to the top side, the sky's the limit, because once it breaks that trend line, it pierces that resistance that it's providing us here. It means that the next stop is all the way up in the 138 area, which is a good 1,300 pips above where it is right now. So if it does pierce this, I'm going to be super bullish on the Euro USD. But again, this is on a daily. I don't expect this to be pierced anytime soon. This could take another month or two to play out. Or, of course, the market will do whatever it wants to do. It could certainly break in the next 10 minutes, but I highly doubt it. This trend line is going to be a tough break for the market. It's a psychological point of resistance. So we'll see how that plays out. But this, the fact that it's so near that trend line, it's testing it from the bottom, makes me bump up this pair again to the forefront of what I'm looking at. So that is my point of view for the Euro USD. Let's take a look at the dollar Swiss. So the dollar Swiss has been moving around three separate channels. It followed, and again, this is a daily, it followed this channel for quite a while, broke up, and is bouncing in between these two higher channels, and recently attempted to go back to the bottom. On this pair, I've been bearish for quite a while. Again, taking small bullish trades for scalping purposes, but long-term trades have been bearish since this trend was established, since it bounced off and created this trend line and has been steadily dropping. I would not see any reason to not be bearish on this pair, and I would look to trade it, continuing to trade bearish all the way down to the bottom of the channel, which is at 90 cents. So that's what I'm looking at. So that is about 260 pips, give or take, of opportunity there, provided it the piercing of this inner trend line we have is maintained. If it continues trading towards the bottom, then its next target is going to be the bottom of this channel. So bullish on the euro dollar, bearish on the dollar Swiss. Pound dollar. On the daily, it has also been in a bullish recovery. It did a significant retrace from its most recent high, which was around 143.5. So 143.50 was the most recent high. It has bounced off of that and went looking for the trend line. This is the beauty of these trend lines. They tend to be followed almost religiously. So it did try to get to that trend line. It didn't quite reach it. It bounced before it reached it. It is probably going to do a test of the 143.50 again, which gives us a good 300 pips of opportunity on the bullish side for the pound dollar. And this is another one that I expect to be doing that. The question is when. Let's remember that both the pound and the dollar have fundamental announcements coming out of their respective central banks this week. So it's very tricky. I would trade it bullish, but I need to see a really good entry on one of the smaller time frames. And of course, I'm going to be very aware of the impending announcements to make sure I either exit my trades prior to them or I tighten my stops to protect any profit that may be had at the time. Okay, let's continue with the USD-JPY. This DJPY is a very interesting little creature here. So it did bounce off the top of the channel that it had been following early this year or late last year, bounced and has been dropping since. I have shorted it for significant number of pips, as you can see from some of these lines. So I've let some of these trades run for a significant time. And I've also taken small in and out trades for scalping purposes along the way. So this has been a really good moneymaker, the USD-JPY. And it's now bounced off the bottom of the channel, which means one of two things. If the bounce holds and it starts rising, then we're going to see it attempt again to get to the top of the channel. And there's about 500 pips worth of action if it does another round trip. You can see how many round trips this has already done. 1, 2, 3, 4, 5, 6, 7. Not round trips, but rather legs. So it's done 7 legs of travel within that channel and is now looking to start an 8th leg up. But if it does pierce the bottom of the channel and stays below it, then your next target is going to be all the way down at 100, which historically is where the USD-JPY lived for many, many years. It became very volatile recently, but you can see that 100 area is where it normally tries to gravitate, 100 yen per dollar. And if we go back, you will see that is just an area that it followed for extremely long periods of time before events both in the US and in Japan made it start going a little bit crazy. So, back to what we're looking at here. We have, again, bottom of the channel. If we see a reversal, a U-turn, I'm going to try to be trading this pair up for as much of these 500, 600 pips as I can capture. If it does pierce, it'll probably pierce, test, and then if it holds, it will start dropping towards the 100 area. And that's another 500 pips we have there. So definitely high on my radar of opportunities for the week and beyond the week. This may take, if you see all these trips it does, they take months to go from top of the channel to bottom, and it will take a month or so in either direction once it picks one. So keeping an eye on that one, but nothing to trade just yet. And again, we're not looking for trades right now, but rather for what we're going to focus on for the week. But if we do see a trade right now, we will, of course, take it. Kiwi dollar, New Zealand dollar on the daily, it was in a very steep recovery. It had suffered a massive reversal due to a political upset in New Zealand late last year. It has now staged a recovery almost to where it had been before the upset. It's within 100, 200 pips of its high of 75 and change. It did have this steep trend line, which it broke. So we're now technically, this would have been a bearish signal, and we did trade a few of these up and down in the last few weeks. Bit of a gray area here. So I still think it needs to go up to the 75 area and test that level of resistance. But with the fundamentals coming out of the U.S. this week, that this is a very dicey trade. So if we do end up trading this one, regardless of what happens, it would be one of those where I would want to get out before any of the U.S. announcements hits, because this is a very volatile pair. And if there's good or bad news, it tends to either rise like a rocket or drop like a stone. Some of these candles are extremely large, and once it establishes a trend, it just tends to keep going. So also on my radar, but I'd be a lot more careful about the Kiwi dollar than about the other pairs we've covered. Aussie dollar, much the same as the Kiwi dollar. It had been in a steep recovery uptrend, which it broke, and this gave us some trading opportunities that we did take last week. It has bounced off of this trend line on its way up again, but it doesn't seem to have strength to continue going up. It's very close to that recent high that it made. So that's at 81.24.6, and it's got about 100, 200 pips there between where it is right now and the top, and it's very near the support given by the trend lines we have here. So this is one I might trade in either direction once it gives us a good entry signal in any of the smaller charts in the 4-hour or 1 hour. So not discounting it. We do have the fundamental announcement coming out on Tuesday, if I'm not mistaken, based on what we reviewed. So we'll keep an eye on this one. Again, if I see a good entry, I'll take it, but it would not be my first choice until later on in the week after their announcement. Euro JPY. So Euro JPY has been flat for a long time and has just returned to that same area of flatness. So this dashed line that you see here at 131.65, that has been a level of support that has held since about September of last year. And even before that, it was a level of resistance that held since mid last year. So it definitely likes the 131 area it's at right now. It is about 400 pips away from its recent high, maybe closer to 500 pips. Right now, it is definitely bearish. We have a downtrend that it is following, or will make a downtrend as soon as it makes a valid high. Actually, this one's probably a valid high, so we can draw a trend line there. But it is a very steep one and can still go in either direction very easily. Again, the key thing here is that it is at a major level of support right now, and it's going to take a bit of strength in the not a bit, a lot of strength in the JPY to burst through that. And if it bursts, it still has several levels of support underneath it until it hits that old trend line here at the bottom. This is a pair that I've really been waiting for that break in order to trade it down, but I need to get a little bit more confirmation. And confirmation for me is going to be piercing the trend line here at the 131, and then I would start to cautiously trade it, being very careful as it approaches all of the different support levels. But if we can get into this trade and get our 1,100 pips out of it, all the way down to the trend line here in black, that might be the trade of the quarter, because it really does have a lot to give. And again, we have Euro and JPY high announcements coming out this week. So I'll be keeping an eye on it and looking for entries, but trading it very carefully. In fact, I'm trading everything very carefully this week just because of all the major announcements that are coming out. But this one would definitely be on my red alert caution list, that if I do trade it, it's going to be with very tight stops and quick in and out if I see anything that I don't like. Moving on to Pound Canadian, a much cleaner chart we have here on the daily. It is following the bottom of this trend line now, and is not that far away from its most recent high, to be seen here at the 178. 178 is that level of resistance. It is close to 200 pips away from it. Again, the problem is it's testing the backside of this trend line. So despite the fact that it's going up, this is a bearish indicator that is now testing the underside. Likely it will drop to test either the resistance here at 171.50 or the slightly lower trend line that we have here. So still a good number of pips, and again, this one is one I would enter if it gives me the right signal on an hourly chart to start trading it for about 50 to 100 pips and letting that grow if it seems to be moving aggressively, moving the limit further away and just moving the stop along to protect profits. So we'll see how that works out. Of course, we can add another trend line here since it's now been kind enough to give us a few lows we can take advantage of. And again, this all indicates that this area right here around the 171.5 is where it will drop if it drops. There's just major support to be seen at that level and nothing much before that. And if it rises, I don't see it going much past that 178 of the most recent high. Still, 200 pips is nothing to sneeze at. So I would trade this one in either direction, and those would be the targets, either the major levels of support down here or the resistance at the top. EuroCAD. EuroCAD has been in a channel since August of last year, in a rising channel. It is now at the top of that channel and actually broke out, but it's not a clear breakout because it's going back to the channel now. And in a day or so, if it stays at the level it's at, it's going to burst through the channel back in anyway. I would expect this to do another test. It has liked to do those trips up and down in zigzag up the channel. So at some point, it will return to test the bottom of it. Not that many pips on this one, about 150 pips to be had if it does do a trip down, perhaps less depending how long it takes. On the upside, it is at its highest point since at its highest it's been since around February 2 years ago. So it's at a 2-year high right now. And the only thing that could drive it down further is a rise in the price of crude oil. The Canadian is very reliant on their economy revolves around crude oil significantly. And if crude oil rises, so does the Canadian. So a rise in oil would mean Canadian strength, making it drop, at least to test the trend line and perhaps even further. We have, of course, another stop right here at the 148 if it drops past that support at 152. So again, this is a nice opportunity for a trade, and that's one we'll have to, as with the others, wait for the right entry. Just going to draw this trend line here to see where we're at. So it's right on that trend line. If I see a trend line break, which means not only it broke this trend line I just drew, but it's also dropped definitively back into the channel, I would take the short. And my short would be that distance from wherever I take the short down to the bottom of the channel for about 200 pips. So on my radar, but no rush. Moving on to the pound dollar. The euro pound. The euro pound has been following this downward trend line, hitting it from the bottom multiple times until it broke through, broke back down, and has now burst out again. So it is in a breakout within its recent bearishness, but at the same time, it's been trading very sideways. Besides this break to the top that it had here, it's in a sideways channel. The boundaries are at 90 and call it 87.5. So there's about 150 pips worth of activity. 250 pips worth of activity, worth of price action between this channel. It has been trading lower, so we can draw another level of resistance in the middle of that channel there. And that's at the 89.20. So you have about 250 pips worth of potential if it goes back to the top of the channel, and about at least 100 pips even if it tests the inner channel. Not a bad trade to take in either direction. Again, what will determine if and when we enter this trade would be an entry signal on one of the smaller time frames. So not too thrilled with this pair, but it's still on my radar. I would be keeping an eye on it. Euro Swiss. It's trying to do a test of the old trend line, and it's definitely in a downtrend. So we can see that it made a high about a month ago at 118.32, 118.35, let's call that. And it has been dropping towards the trend line since. It didn't quite touch it. It's still on its way down. This is another pair that I've traded in and out of for a few weeks with some good results. There have been losing trades in here, but the winners have outweighed the losers. So I like this pair. Definitely bearish on all counts until at least it does a valid test of that trend line. If it does pierce, this is another pair that could have significant opportunities if it continues on its way down. We do have a few stops along the way that I hadn't taken the time to fully draw in, but I'm doing that right now. So it's not going to be like it's going to drop 1,000 pips in one go. It will have some stops along the way, but there is a good amount of pips to be had if it continues its bearish trend. Don't forget though that the overall trend is still bullish overall. It's just in a bearish test of the upper upward trend line at this time. But whenever it does that, there's always a possibility of a break, and then we can see it trying to test one of the lower levels of support. Aussie JPY. Aussie JPY has also been in somewhat of a sideways channel, a wide one, about 500 pips wide, and it's now at the bottom of not only the channel, but it's tested the trend line. It's done a bunch of stuff in recent days and weeks. All things being equal, it has bounced off of support. It's bounced off of the trend line, bounced off of the different levels of support, and is starting to climb back up. It's and I'm actually in this trade right now with my take profit. You can see that take profit up here at around the 89 level. And my stop loss significantly lower. This is a very wide trade, so there's about 500 pips of action here, based on the fact that it did do a bounce on the trend line and a couple of the levels of support. So this is an open trade. We'll see where it goes. I would not be trading it short. Even if it drops, well, if it drops, it will give you a couple of hundred pips until the next level of support. But more likely, based on all this level of support that it has up here, and the fact that it's already bounced off of it, likely scenario is it's on a trip back up. That will depend, of course, on the Aussie itself and the JPY, and both of them have fundamentals this week. So, as with the others, trade with care, and we'll keep you posted on any of my trades throughout as the week progresses. Pound JPY. No man's land right now. It is testing a very long-running trend line. So it just dropped to test it. And it could go either way. If it pierces, we could see it drop to one of the next levels of support on its way up and down. I'll draw some of them here just to see where we're going to see some of those stops. So there is a nice amount of pips here. We've got about 600 pips worth of activity until it comes back here to the 143. I am bearish on both the pound and the JPY, albeit cautiously. I'm more bearish than neutral, I'm more bullish on the individual currencies than I am neutral right now. But since I'm bullish on both of them, this might be a pair that just hangs out at the level it's at for a while before determining a direction. So it's going to be very simple. If I see a confirmed break of this trend line, I would go short. If I see a definitive U-turn here, I am going to go long. And my targets are going to be either the 152.50 of this level of resistance it's going to find up here, or it's going to be the 143, or as much of that as I can capture in one go, depending on what it does. But until I see a valid signal, this is a no trade. Aussie Canadian. Aussie Canadian is in a bit of a sideways jag as well, with differing levels of support resistance along the way. And we're going to draw some of these in just to see where we're at. It is in a very short-term uptrend since about a week or two back. Its next stop, if it continues going up, is going to be at parity. So one Aussie for one Canadian. And it's less than 100 pips away from that. So there's not a whole lot of trading opportunities on the way up. On the way down, however, we do have about 200 pips worth of opportunity, but it would need to significantly U-turn. So we have a good confirmation that it is on its way down to test that. So not a pair I'm too thrilled with at this time. There's better opportunities out there. But if I see something happening on it, I wouldn't reject the trade. Again, we have both Aussie and Canadian fundamentals this week. In fact, the only one I think I didn't see a fundamental on was the Kiwi. Everybody else seems to have something going on. The Kiwi and the Swiss. Everybody else seems to have something going on this week. Okay, for the Euro New Zealand, we have it right now at one of the major levels of support, and not too high above the next level, which is about 150 pips below where it's at. I would be more bearish on this pair than bullish, so I would expect it to drop and test the 166.25 or even the slightly lower trend line below it. The recent high, definitely it's not looking to test that. It tried and failed, so it has U-turned. There's no doubt about that. We do have a U-turn. This is bearish. And this is a trend line break already. So all things being equal, I would be trading this one short at this point. But I'm probably going to wait another few hours past the open, maybe into the London Open at 3 a.m. my time, before I make a decision. These first hours when the market's open, and especially tomorrow with the lower volume here in the United States due to the holiday, I'm going to wait for a better signal, even if I sacrifice 30 pips or something like that before I manage to enter. But if anybody is in a less conservative mode, you could go short on this pair, but my stop would be, about 100. Yeah, your stop needs to be about 150 pips, and your profit is going to be that. It's going to be a 1-to-1 risk. Again, this is not a trade I would take, but certainly if you want to take it, you need to be at least 1-to-1 on risk reward. And your target's going to be anywhere between 120 and 150 pips below where it is right now. But this trade could very easily go against you. It's just in a very, very indecisive point in the chart. And we are at the last pair I'm going to look at on the daily, which is the USD Canadian. It has been in a downtrend for quite a while, bounced off 120.5 back last year, and has been trading somewhat sideways since then. Another pair that I've been in and out of multiple times for small gains, 100 pips here, 100 pips there. After I traded this one almost all the way down last year, and then just stopped trading it for a while as it started retracing. Now I'm looking at getting back into it. If anything, this pair should be good for a test of the 120.5, and that's 500 pips. But I need to see a convincing U-turn and a sustained downtrend before I would enter it. So I'm probably going to end up giving up maybe 100 pips, waiting for the proper confirmation, and then try to trade it for the remaining 400. But that's not going to be just yet. There is no trend line I can draw here yet. We haven't had a valid low in quite a while on this pair. So the last trend line is really just a downward trend line that we have here. which is close enough to this trend line that I'm not going to bother drawing it. It's just going to be a parallel of that. Okay, so nothing much to see there. That does cover my weekly review of the significant pairs. I'm going to just go take a peek at a few of them on the hourly chart to see what they've done since the market opened. And I'm going to start with the euro dollar here. So euro dollar on the hour is in a downtrend and has hit one of the major support points on the hourly chart. So as I said with the euro, I would dearly love to trade it about 200 pips down. And I'll wait to see what it does in the next few hours before taking that decision. Let me look at the Swiss against the dollar. On the hourly, it has been dropping steadily. It has a support, a resistance at 93 and a support at 92.5. So it's pretty much in the middle. That's very, very close to the support here at 92.5. If it does pierce this support at 92.5, I'm going to take that as an entry on the USD Swiss. So I'm going to keep a close eye on this one for the next few hours into the London Open and see if I can trade it down about 100 to 120 pips below where it is right now as it tests this trend line on the hourly. And if it does pierce that, of course, it has plenty of room to drop even further. USD/JPY, strictly following this trend line on the hourly, so there's nothing much to be seen there. And it's trading very flat on the hourly. So if anything, definitely worth taking a look at if we see a good entry to trade it to this trend line for about 200 pips. So another one I'm going to keep an eye on, but this is so shallow that I'm going to take a bit of convincing before I think that it's dropping to that support level. Let's see if there's any other one I want to take a look at the hourly this early. I am going to be up at 3 a.m. and take a look at the hourlies then. I don't think that there's a lot to be seen right now on any of them. They're either at one of their trend lines and figuring out what they're doing, or they're just in no man's land. Aussie dollar, this one I've been trading up, as you can see from this nice little line here. Traded it up a week or two back. Exited when it retraced, and now I'm waiting for another signal here. But if anything, I would be looking at it to go back above this trend line and start heading back up towards its recent high of either 81 or 81.5, which is a good enough amount of pips, 200 plus. So on my radar, but not just yet. That's going to be the case with all of them. There is no good entry right now this early in the week. This week, there's some weeks that give us brilliant entries right at the open. This is not one of them. But I'll revisit this at the 3 a.m. And as a courtesy, if I see any trades at the 3 a.m., I will email them out. Of course, anybody on my signals list would get those anyway. But the rest of you, I'll shoot an email out so you know what I'm doing for the London Open later tonight. And the trading day, the New York trading day, I'm probably going to be just relaxing because the volume is not going to be after 12 p.m. It's not going to be worthwhile until the Asian market opens later in the evening. Okay, that's all I got. If we take another look just as a reminder. I'm going to stop this share. And I'm going to go back to my fundamental calendar. And I wasn't paying attention to who joined. I see Hayden joined. How are you, my friend? And fundamental announcements, share screen. Okay, so these are the 1, 2, 3, 4, 5, 6, 7, 8 high announcements for the week to come. So again, trading any of the Aussie, pound, euro, dollar, Canadian pairs during these times is going to be very risky. So if you do take any trades, be aware of when these announcements come out and be ready to either close out your trades at a profit if you've got them open, and even taking a slight loss. A small loss is better than a big loss, guys. So if any of these trades makes you nervous before one of the announcements, just get out. If you do stick it with it throughout the announcement, at least tighten your stop. So if it goes against you, you take some money home, or at least you don't dig a very deep hole. Because some of these, especially since they're central bank meetings and minutes and reports, they have the potential to move the market hundreds of pips in seconds. That's a lot of fun when you're on the right side of the trade. Not so much fun when you're going against the grain, so to speak. So that's it. That's all I have for today. If anybody has any questions, comments, I'm just going to unmute everybody. If you don't have any, just mute yourself back. But if you have anything to say, hit me.
First thing is thanks, Andy, and sorry I was late, got held up, but I'm definitely going to be following these meetings. It's very, very helpful.
Not a problem, man. My pleasure.
Also, what I'm excited about too is looking where you would enter, and once I have time to look at my chart, see where I would enter. Something I've done recently is I'm starting to do a zoom in on the monthly bar of each pair that I'm interested in. And that's telling, so that my whole theme has been the single bar, the monthly bar. And I hadn't realized that the big charts that you get either with MetaTrader and so on, they give you the information, but you can't zoom in enough for me. And so anyway, I'm enjoying this zoom in on the monthly and squeezing.
Yeah, absolutely. And realize, back to what you were saying at the beginning, that my entries and yours might not be exactly the same. They should be close enough, but there is a level of subjectivity in analysis. So it's not like it's a cookie cutter and everybody's going to come up with the same result. So keep that in mind. But I do like your approach, because when you look at the monthlies, you get a much longer term view of the market. And I'm a big fan of those longer term trades for hundreds of pips versus working hour to hour, trying to scalp the market for 20, 50 pips at a time.
Exactly. Yeah. Yeah. It's, No, I kind of expect, and excuse me, I'll just continue. I kind of expect our entries to have a difference. I would be surprised if we're very, very close. But
they should. Especially if we're looking at long-term versus short-term trades. There's entries I would take for a short-term trade that I would definitely not for a longer one. So that's going to make a difference as well. But yeah, you're very right and very perceptive on that side. Thanks a lot.
Sure.
Anybody else have anything they want to add or comment on?
Just a comment, just to add, thank you. And it's been very informative.
Hey, no problem, man. My pleasure. Okay, I will send you guys a recording of this session and as soon as I upload it. So if you need to review anything, you can. Obviously, as I said in the email, this has a very short shelf life. It's for the week. It shouldn't be taken for anything further than the week. And we'll continue doing these on Sundays, so we get that little bit of overview as to what we should be looking for during the week. As a final cautionary reminder, this is a week heavy in high announcements of very, very significant impact. So not a week to be trying to be a cowboy and shoot from the hip. This is a week to be very careful. And if you're very conservative in your trading, might even be a week to sit it out and go have fun doing something else. These central bank minutes can get very volatile very easily.
We hear you. We hear you.
Okay, folks, thank you very much. It's been a pleasure being with you, and I will catch you next time. Thanks a lot.
Thank you, Andy.
Thanks again.
Anytime.